Good morning, traders. It is Tuesday, October 14th. Markets are down this morning. We talked about this yesterday. If we go over to this chart, we talked about how this market could bounce and roll over and want to head lower. If we go back and look at our sentiment charts, our panic selling FOMO indicator, we went into this oversold panic sell-off on Friday. Yesterday was a bounce and we had FOMO pretty much all day. We talked about last night in the video and the update that this means the market could easily go down and have a much deeper correction. And on the daily chart, that would point to around 64.44, something like that. We talked about using a little Fibonacci bear flag pattern here. So overall, market is rolling over this morning. Obviously, it's China and the U.S. going tit for tat over tariffs and all of that stuff. So again, the volatility is coming back and the market's trying to figure out what it is going to do. This price action today could end up putting this trend to an end, which is not a bad thing. It'd be nice to step aside, let the market shake itself out and potentially just move to safety or move to another position that could potentially go up as the market corrects. We'll just have to see what happens today and how things move and where we're at. But overall, volatility is here. One of the members wanted to look at the Dow Jones. So if we look at the Dow, it's pretty much the same. All these indices pretty much do the same thing, other than they may have a trigger a day or two before or after another indice. So we definitely have the Dow trading lower. Looks like it wants to go down. Again, if you just look at the hard right edge of the last couple of days, it doesn't matter if it's the Dow, it doesn't matter if it's the NASDAQ, it doesn't matter if it is the Russell 2000. All of them have pretty much the same chart patterns. It's just percentage-wise, they move a little bit differently here and there. And the market is definitely losing momentum here. And we're definitely seeing this tariff thing come back to life. Obviously, the last time we had the tariff was this over here. The market pulled back. It gave a sell signal, and then the market collapsed as all that started to unfold. And so now we're kind of back at this turning point here. Very similar scenario as we've talked about many times. The insiders or the big money have been unloading shares and moving to safety while the general public drive the markets to all-time highs. We have the same here, and it's just a matter of when does it crack and break down and we get into something ugly. And that is why we don't try to pick a top, because we could have picked a top somewhere way back over here and it ends up going against you for a long period of time. In this market, you never know. By the end of the day, it could recover and keep going higher. Although my gut and the momentum feels like we're running out of steam, and today or tomorrow could be the end of this uptrend depending how things unfold. Overall, if we go and look at where money is flowing today, so it is flowing out of stocks. We are seeing money move into bonds, the dollar. If we see bonds there, they're starting to pop and push higher. So it's a pretty nice move in the bond market. Again, trying to carve out this shorter term bottom. When we look way back even further, it's there's a lot of work to be done, but the momentum is starting to flatline. It is starting to build definitely a clear shorter term uptrend here with higher lows and higher highs. Gold was trading higher. It has turned a corner here in the last little bit. Gold is pushed up to some all-time highs. We had that 4,100 target, which more or less it hit and tagged yesterday, and today, this morning, we've seen it kind of go up a little bit higher, and it's starting to fizzle down. So I expect this whole area, right from about 40.80 to about 4,100 and change, which is blown through there this morning and last night. I expect all of this to create some volatility, meaning it could pull back, it could chop around for a while, build a little bit of a pause before it wants to run higher. Typically, when you hit a Fibonacci level, it starts to kind of do this. It could if you notice, it actually traded sideways here for almost 2 weeks. So it could very easily kind of just chop around pretty ugly, but really it could just be a pause before it starts to take a run and go higher. But we're definitely seeing money moving to these defensive safety plays. If we look at silver, down 1.4% this morning, if you take a look at that, look at the volume on the 10-minute chart. We pushed up to some new all-time highs all the way up to 42.55, somewhere in there. Big selling has stepped in. We've touched on this last week, how we're starting to see some very big distribution days, meaning big money is unloading blocks of gold and silver or bars of gold and silver over and over again, telling us we're getting into this increased volatility. None of this is a real surprise. We're expecting pops and drops and pops and shakeouts, and we're expecting big volume. Nothing has changed from our analysis as over the time we're now finally, I think, into the storm, the eye of the storm, of the FOMO storm. And I've got some members that are talking about they got some big profits. They can't stomach getting out of them. They don't want to lock in some gains, or they're struggling to want to do that because they're up so much and the sector's on fire. Again, usually when you feel really good and markets are up huge, I think this is what separates a lot of traders, successful traders, long-term successful traders from average self-directed traders, are people who actually can take profits. They don't worry about things running higher after they get out. If you don't take profits, eventually the cycle will end and you give it all back and you have dead money for another decade potentially, depending on the sector you're in. So again, I still think gold, silver could have this blow off phase. It's getting into volatility, but it could still really take off. But these are usually the last final signs that we're pretty darn close to the end. And I'm a big fan of locking in profits, and I don't worry about things moving up after I get out as much. I'm not a fan of it, but it is part of trading. Eventually, you do have to pull the trigger and get out, because eventually it will have some pullback, and it could go dormant for a very long period of time. Let's take a look at gold miners real quick. Gold miners are trading lower in pre-market. They're starting to sell off. They came right up, tagged these highs yesterday, and today they're set to open quite a bit lower. Overall, they're trading down at 77, 78, some down here. So it's coming back down a little bit. If we look at silver miners, let's go to XSILJ. Same type of thing. We're getting gaps and pops. XME, I know some of you are in XME, which is kind of a base metal miners. It does have some precious metal miners in here. It's been on fire, up huge as well. If we take a look at platinum and palladium real quick, platinum down 2.5%, lots of volatility there, lots of selling volume. Palladium looks kind of the same. We do have some selling and volatility. And if we take a look at Bitcoin as the dog, man, is it ever just not finding any love. Not only does it have pressure from two days of selling in the stock market where it's got pulled down, but it also has bad news in the whole space, creating, I think, people to sell Bitcoin and cash out and all that stuff. So this is what I was talking about. This chart pattern here, I mentioned before, I'm not a big fan of it. I liked Bitcoin through this phase and this phase, and was looking for a potential position, but the way it's been acting, it's just not a trade that I want to touch. And it's funny how you can get these feelings when you watch things long enough and you understand the ebbs and flows of the markets and how things are interconnected. You start to look at this. I know a lot of people were looking at this, and a lot of people were bullish and wanted to get in. I just said, I'm not interested. I'm not a fan of this chart. It wants to do this, makes a nominal new high and then gets rejected. It makes a nominal new high and got rejected, and now it's really right back down here. So sometimes there is a gut feeling. Obviously, for me to get into something, it has to feel right, it has to look right, and all the other things, the intermarket analysis, have to also be in line. And that's what we had with the gold trade. It's just everything was in line and it was a nice setup, whereas Bitcoin is just ugly and it's not performing the way we want it to. It's the only reason you'd get into Bitcoin, in my opinion, is because it's got to be a perfect trade. If somebody's getting into it, it's just because you like it a lot, but the chart isn't very pretty, and it has to have a pretty painted chart, more or less. Let's take a look at oil. Hit our target. We were talking about it getting down to $57, the $56, $57 a barrel. It came down and tagged that this morning, and I do think it can still flush down even more. But overall, everything is unfolding. The oil going down is also the way of the market telling us the economy is likely weakening. Investors are getting rid of oil because they see demand slowing. Obviously, jacking up the tariffs and not shipping stuff across the world could cut down some serious supply in terms of, or demand for oil, if a lot less is getting shipped from around the world from China. Anyways, in the grand scheme of things, we have the 2007 chart on the left. We have the current day's chart where we are right now on the right. The big question is, are we like right here where the stock market is starting this potential new big pullback? If I was to just pull this chart over, are we potentially starting this pullback and we're going to see the market start to struggle? And if so, that means gold is kind of here where the stock market might start to fall out of favor here for a bit, and we could see gold and silver really start to have one last push. And the big question is, are they going to rally together or sell off together? I kind of have a little bit of a feel that I think we're going to see them try to push higher as a defensive play. But I do also think we could see some strong selling. We could start to see them, gold not perform quite as much. Maybe it won't be this explosive of a move to the upside. But again, we'll just have to see. Right now, we're in favor of precious metals. Even if the stock market goes down, that money coming out of stocks is going to go into whatever asset or sector is moving up. And of course, gold and silver are the ones that are shining bright to lure money in. And so they might have that big push. So I believe this is kind of where we are. I know I've mentioned this many times in the past, but all the things, if you've been following me, you can see the nitty gritty. The intraday charts are now telling us like this is kind of where we're at. The stock market might go into a correction. It might go into a bear market. And if that is the case, we are on the cusp of annihilation of most people who are retired or soon to retire. They won't be able to if you hold through this, and it will be devastating. And this is the whole point of why I manage positions, is so that we can not only avoid it, but there will be some waves in here where we can grow our accounts and push things higher. And of course, precious metals is kind of that late bloomer in this cycle. As the stock market sells off, we can squeeze a bit more out if you're holding precious metals, which most of us are. And then eventually precious metals will become a new play that we can get into, which will be usually earlier. It'll bottom out before the stock market, the economy does. Anyways, that's it for now. We'll talk to you soon. Bye-bye.